What is up, everyone? Welcome back to the trading world. In this video, I'm going to be reviewing a price action for yesterday, Friday, July 11th. There's a lot to talk about, a lot of good trades you could have taken, and a lot of interesting stuff in general that we are going to review. So if you like this type of content, definitely consider subscribing, leaving a like, following me on Twitter, and also checking out my completely free Discord. The link to that is in my bio. Let's jump right into it. So, first, I want to start the day off by saying today should have been easy, but the issue that I think I ran into, that I think anyone would run into, is you take a winning trade the day before and you come into the market the next day, and if you don't do the proper prep and if you don't get enough sleep, you're going to do something stupid. And that's essentially what happened with me today, or yesterday on Friday, is I came into the market thinking I could replicate exactly what I did on Thursday. Not even, like, you can even hear me say this in this clip here. I'm going to play it right now. But I barely...
Did you wake up 3 minutes ago? Low key, I woke up like 10 minutes ago. So I just woke up. Jackson, dude, check out the trade I took.
So you can see that, like, I'm still kind of tired. I haven't completely done the pre-market analysis I need to do. And it's like, if I'm not doing everything I'm supposed to, I need to be very defensive going into the market. I can't just walk in and think that I'm going to replicate exactly what I did the day before. And so, going into market open, we actually get really obvious AMD. You can see here, we have accumulation. This was going into market open, accumulation. 9:30 is right here. That's when the market opens up. We get our classic Judas swing, where right after 9:30, if you see like a fake out move, that's called a Judas swing. So anytime you have a move that goes opposite of the real move, that's a Judas swing. And it usually happens right after market open. Market opens at 9:30. We get this fake out move before below these accumulation lows, as well below 8:30, which is another key time you want to watch out for. And guys, if I was in the right frame of mind, I really should have realized all this. I really should have realized all this, especially because as well, we have high time frame SMT. We have SMT with previous day's low. And we have another higher time from SMT here. We have previous day's low SMT and SMT with Asia. And guys, I just personally think the issue was I was tired. I did not do my pre-market analysis. I wasn't fully looking at everything. And I wasn't thinking in terms of AMD. I mean, I thought this was the manipulation, but you have to understand the bias and also realize that you can get a move that looks like manipulation, but sometimes this will be the true manipulation, right? And you have to be ready for that. And so if I just knew the bias, I don't think I would have taken the trade I ended up taking, because this is very obviously accumulating manipulation below that 8:30 time, sweeping this low, and then you can see here, we get a very nice 1 minute change in state of delivery, and there was a 15-minute fair value gap here. So we can take this as a flow state trade, where either on the close, since it's pretty close, or on the retest, we can enter off this 1 minute change in state of delivery, knowing this is accumulation, manipulation below the accumulation range lows, and then distribution. So we can enter here, 2 to 2.25, and then 4 to 4.25, both get hit. Now, personally, I'm just trying to go for between 1 and 2R. It depends. I will leave runners now. I'm not necessarily only going for 1 or 2R, but, you know, I try and be realistic, but also do what's actual best in whatever situation. That's why I take partials. But there were lots of other ways you could have taken this, right? We can see here that Dodgy... later on, Dodgy gets this really amazing inversion, and a lot of people ended up taking this inversion today. So this was a very good inversion to take. You can see a lot of people took it. Dino took it. Dodgy took it. Hydra takes it. And it's just super clean because it's really V-shape. I'm gonna pull that up real quick. Here it is. It's V-shaped. This happens later on in the morning, but it's super V-shaped, sweeping out the lows, delivering from the fair value gap, and then we go right to these highs. So this was a really nice trade. Unfortunately, I'd already taken my trade, which was a loss. I will go over that in just a second. But this was beautiful, delivering from a fair value gap, quick inversion, and we go run these low resistance highs. A lot of people took that. It was genuinely really beautiful. And also notice how this inversion happens in 3 candles, where we get a quick move down and an instant pop back up. Those are the best inversions. Especially, it's very important to see us sweep this low into this gap. And that's exactly what we get. So then there are other ways, other inversions you could have taken. There's this inversion here, just going for like 1-to-1, and as well acknowledging that this is accumulation, manipulation, distribution, right? And the reason this isn't manipulation is you got to know the bias, right? And the bias, you could have, if you had done pre-market analysis, you could determine the bias because of these SMTs, right? We have giant SMT here, and then another SMT here, and actually, we end up getting a third SMT with YM on these lows. That's something I didn't even mark out there, but that's another thing. So you gotta really be paying attention to SMTs because they're going to be very critical for bias. And I'm gonna look at the trade I took. The thought was we had SMT, we had a 1 hour gap, and I liked this 5-minute change in state. You can see if this loads here, you can kind of see it right now. We have a 1 hour gap, we get SMT sweeping out that high, we get a 5-minute change in state of delivery. It's not gonna load, but essentially that's what it was, a 1 hour gap with 5-minute change in state of delivery. And oh, I lost the internet. I wonder if this is still recording. Should be. Hopefully I get reconnected to the internet because I don't want to have to re-record this. Let's see if we do. And anyway, like I was saying, oh, here we go. Okay, I'm not gonna re-record this because I'm already so far into it. 1 hour gap. You can kind of see it here. 1 hour gap, and then we have SMT with that high. You can see that there, and so we had 5-minute changes to the delivery. But in my opinion, the draw on liquidity was wrong. One, the draw on liquidity was wrong. So if I go here, the draw on liquidity was wrong. And also note that we're in a higher time frame accumulation. You can see here the market is accumulating back and forth. And so because we haven't gotten manipulation on the higher time frame yet, there's no real reason to expect what I was expecting, which was a move lower yet, right? Because right now it's just very obviously accumulating and we're staying within this range. So but especially with these SMTs, right? Remember SMT here, you can see that literally right there with the S&P. We got a lower low on NASDAQ. I guess it's with this low, and then a higher low on S&P, and yeah, we get another one here. You can see that, and then this one happens with YM. And after we get all 3 of those SMTs, we sweep out all these lows. And it becomes very obvious that this is accumulation, manipulation, distribution. And I gotta charge my laptop. Oh, what is going on? Sorry guys, normally I'm prepared, but I really don't want to re-record this right now. So, okay, back to what I was talking about. So, let's see. Yeah, so the main thing was I needed to have done my entire pre-market analysis, and I needed to not be tired. And those are very critical things to be looking at going forward. Even though we have S&T here with this high, and we have that 5-minute change in state, that doesn't mean that it's a valid trade. I have to be in line with everything that's going on and be prepared, because right at this time there was there was a way bigger SMT going on, and also recency of an SMT matters. We get this SMT with this high, but this is old news. We already got the move lower. Now we got to be looking at the SMT with this low with YM. That's the SMT we got to be looking at. Don't use SMTs that have happened previously. Those are not important. Look at the SMTs that are currently forming, and those are the ones you want to use to take trades off of. Recency of an SMT matters, and so you got to be looking, because right here at this time we're getting SMT with YM, and we have 2 other SMTs. So recency of SMT matters, and I will make a whole video about that actually, probably. But anyway, accumulation, like I was saying, accumulation, manipulation, distribution, and let's see here. You can see there are lots of different ways to take this. As well, this was a sweep, break of structure, fair value gap entry. And you could just target this high. And then same thing with this inversion, right? This 5-minute inversion. Let's say that you weren't sure yet. We came up, came back down. You could take an entry on a retracement, and this would actually be a 3R. I call this the Jan entry. Anytime you enter an inversion already after it's inverse, but it's still valid for better RR, and you can see that ends up going in an ETP. And then we have, let's see what else I have marked out. Let's look at some more trades from other people. Tyler talks about how when we sweep out that low and we close above, that creates this as a breaker. I'm assuming he's looking at this on the lower time frame, because what he marked out doesn't make a ton of sense, but there was a breaker here once we swept out this low aggressively and we close higher. That creates this as a breaker. We expand up. It's just Haney, bro. Very beautiful trade he catches, and it's based off of this concept called the first presented fair value gap. And it's essentially the first fair value gap that forms after 9:30, and whether we respect it or inverse it, it sometimes we'll respect it, sometimes we'll inverse it, but whatever the case, it is a useful level that we're going to respect when you know the draw on liquidity. For instance, if you knew the draw on liquidity was these low resistance highs, well, we have the first presented fair value gap was right after 9:30. It was at 9:31. So here's that first presented fair value gap, 9:31, and then 9:33. We inverse this lower gap, and then we inverse the first presented fair value gap. And since our bias is these low resistance highs up here, well, now that we've inversed this first presented fair value gap, we're looking to use this first presented fair value gap as support to go run up to those low resistance highs. So the way you would take this is since we already inversed this gap, enter when we retest it, targeting those low resistance highs, and that's 2-to-1. And I believe, I could be wrong, but I believe that's what It's Just Haney does here. Beautiful execution. You can see just this exact trade that I mapped out just now. This is just like a 2R. When we inverse that first presented fair value gap, and then I'm not sure, I guess he entered right when we inversed it, but you could even enter on the inverse and then retest of that gap, and that would be valid too, because once again, an inversion with a retracement is still, this initial inversion is still a valid inversion. We haven't invalidated the model, so now all of a sudden you get the same trade with better RR, right? So you could enter on a retrace, so like this would be like a Jan entry, and we retest it, and boom. Or you could enter right on the inversion. That's another way you could have done it. But the first presented fair value gap, watch out for that. Pay attention to bias, and based off of your bias, you'll know, should we respect the first presented fair value gap, Or should we inverse the first presented fair value gap and then back test it and then continue? You have to know the bias. That's so important. But if you have the drawn liquidity and the bias, the first presented fair value gap is going to be very useful as like a launch pad for whichever direction you're going to go. See how we inverse it, retest it, and then continue. And then we go run these low resistance highs. Very, very cool. Then as well, yeah. Once again, very obvious accumulation, manipulation, distribution. Then later on, we end up, let's see here, what else do we want to talk about? Okay, later on, we have a 10 a.m. power of 3 where we actually get another bearish SMT. Once again, recency of an SMT actually does matter a lot. We want to see SMTs be recent because you know, if it's recent, that means the SMT, that's better chance of being the actual high, right? If you're looking at the SMT, it's like the move down already happened. Like, what's the point in using that SMT? You already missed the move, bro. You know what I'm saying? Like, the whole point of SMT is you gotta catch the SMT and use it as a confluence as soon as you can in your trade. If you're not doing that, it's like, it kind of defeats the point of the SMT. So once again, we get this SMT, we get a sweep. There's two different ways you can take this, right? Sweep, break of this low here. So sweep, break of this low. Once again, 10 a.m. 10 a.m. is when a new candle opens up, a new 4-hour candle. So because of this, when we expect the new candle to open up, we're expecting 10 a.m. accumulation. Every candle is a range. So 10 a.m. we're expecting accumulation, manipulation, and distribution, right? So we're paying attention to the 10 a.m. opening price. Which way do we move first? And then pay attention to when we get our reversal and then target the other side of 10 a.m., right? Because a lot of the time, 10 a.m. is so since it's when a new candle forms, it is when we can get a possible reversal. So we're paying attention to, okay, we manipulate the high. We got SMT super recently, and guys, this is one of the cleanest signatures you can possibly get with the 2022 model, and you guys got to have this memorized in your brain. Sweep, break of this low, we also break this low. This is the signature that's going to repeat in the market day after day after day. Sweep, break of this low, break of this low, retest of the fair value gap, and then if you measure out this change in state of delivery from here to here, so this is the order block that sweeps liquidity, we go right to the second standard deviation, and then the fourth standard deviation. So once again, accumulation, manipulation, sweeping liquidity, SMT with London, and then distribution. To the second standard deviation, back up to the fourth standard deviation. Boom. 10 a.m. power of 3, right? Watching that 10 a.m. opening price, which way do we manipulate, which way do we distribute? But also pay attention to, is the 10 a.m. going to reverse, or is the 10 a.m. candle going to expand? Like, you want to pay attention to the higher time frame too. You can't just assume the 10 a.m. candle is going to be a reversal candle every time. It's just 10 a.m. is when a new 4-hour candle opens up. So you could have a reversal. It's just something you got to pay attention to, right? There's a lot of different ways to look at it. Then, yeah, this is the same thing. This is how you would take this as a trade. I had this 15-minute breaker from way off the chart as the key level. It's not super obvious, so I'd probably take this as a 2022 model instead, where we sweep, break the low, retest the fair value gap. I think that's a little bit cleaner. And then, yeah, same thing here. You can see accumulation, manipulation, change in state, up to the second standard deviation, up to the fourth standard deviation, perfectly. Let's see, what else do we have? I noted, I don't know if I love this one a lot, but we had a 1-hour rejection block, SMT, 5-minute change in state of delivery. We go tap the second standard deviation, which is above these low resistance highs, and we tap OTE of the change in state of delivery to the low. So if I measure this out, right? This is the move we use to project out standard deviations, the move that sweeps this low. So if I measure this out, we project this out, 1, 2, there we get our second standard deviation resting right above those highs. But as well, if I measure out OTE from this low to the change in state of delivery, you can see we tap OTE perfectly. So theoretically, you can take this trade where you enter at OTE, inducing these lows, and then you go target the second standard deviation. Not saying we should be doing this, but it's an observation that I've noticed over and over again in the market, and one day I would like to take trades like this. So, change in state of delivery, inducement of these lows into optimal trade entry, from this low to that change in state of delivery, and once again we have a 1 hour key level, and then we expand up to the second standard deviation. Then, here another image of recency of an SMT matters. We have SMT, we sweep out the high, but like this SMT from these highs isn't gonna work forever. This is the trade I tried to take, right? We had the SMT at the highs, but like, dude, we already had them move lower. It's old news. The move lower is old news. Focus on the most recent SMT, which is these lows with YM. Focus on what is currently happening with the SMTs, not the SMT that's old news. Recency of an SMT matters. SMT works, but not forever. And so this is called the Magneto effect, where when you have an SMT and then you get an opposing SMT, the highs of the original SMT get targeted. This is the Magneto effect. And so SMT with YM with this low here, and then aggressively we expand back towards the highs of the original SMT, because the people that traded this SMT and ignored this SMT are now going to be liquidity, which was me today, right? That was me today. And then noting as well, I think we covered most everything. Let's see if there's anything else from Twitter. Yeah, we talked about It's Haney. Sotep takes this inversion that everyone else took as well. This was on ES, but another unicorn. So breaker, we pop below the low, close above, retest it. This is on ES though. And yeah, it's the same exact thing that happens on NQ, but on ES. Yeah, it looks like we covered everything. We covered everything from Twitter, and yeah, now that we've covered everything, I'm gonna talk about the things that are just for you people who made it to the end. So quarterly theory worked out where we had SMT with previous day's low, SMT with Asia. This candle right here that forms the swing low of the SMT, when this candle that forms the swing low of an SMT, when one candle is red on one asset and one candle is green on another asset, that's a precision swing point. And that's going to validate that this SMT is locked in. Once we get that swing low that where one asset forms a red candle and another asset forms a green candle, that's going to validate that this SMT is valid. And so what you can do is you can actually enter on the wick of that precision swing point candle. So once again, I'll show you this on the real charts here. I will literally show you this, right? We have SMT with Asia's lows. So this was on the 5 minute, right? You can see this happening where here's Asia's lows, S&P makes a lower low, NASDAQ makes a higher low. So here we have SMT with Asia's lows. And once again, we already had that SMT with previous day's low. So anyway, SMT with Asia's lows. And then here's this precision swing point. So once again, SMT with a session, I don't know actually if that's for sure, but I'm pretty sure SMTs with session highs and lows and previous day's highs and lows are higher probability. since they're highs and lows of significance. So Asia, S&T with Asia's lows. So, and then once again, there was S&T here with previous day's low. I'm not going to draw that one out, but there was S&T with previous day's low. And then pay attention to this candle that forms the swing low of the S&T, right? This green candle this candle at 6 o'clock is green on NASDAQ, but it's red on YM. So this is a precision swing point, and this is going to be very, very sensitive. It's going to be very sensitive. And so what you can actually do is use either the entire precision swing point candle, or you can even use the wick of this precision swing point candle. And this is going to be a laser precise entry, like stupidly laser precise. Because essentially what you're saying is, I think this S&T is super high probability, and I am very confident that this is going to be the swing low that formed that SMT. So this should be the highest probability, highest RR trade I can get is off of this wick of the low that formed this SMT. Basically, that's what you're saying. So what you can do is you can enter, when we retest the wick of that precision swing point, and then let's say you were to target these low resistance highs, that would be a 9-to-1. Not saying we should go for these now, but since you made it to the end of this video, I wanted to talk about this. SMT with Asia, and then this green candle on NASDAQ, and then it's a red candle on YM, validates this as a precision swing point. And so now we're paying attention to how we respect this candle here. And you can see we respect it very well, and then we go expand towards those low resistance highs. So something that I noticed that was really cool. And then last thing I want to note is, once again, for those who've made it to the end and are interested, we had it happen again where our dealing ranges played out, where it played out on the 1 minute chart, the 81 power of 3. You can see we have a sweep of this low here, so liquidity sweep. So so for those who don't know what this is, basically it's going to tell you where the 2022 models are going to form. It's basically it tells you the dealing ranges that the models are going to form, right? So we sweep out this low, we break this high, right? So liquidity sweep, break of structure. So here's that break of structure. So for those who don't know what the 2022 model is, it is when you sweep out a low, so get a reaction off of an old low. We get a candle body close above an old high, so we break this high here, and then we retest it for value gap. Now the thing with this is going to tell you exactly where the fair value gap of the 2022 model should form. That's the craziest. It sounds ridiculous, but look at this. Just to show you, right? Once again, this is the fair value gap partition. This is where the fair value gap should form, in between 0.17 and 0.11, right? So that's where the fair value gap should form. We scroll back, drag this back all the way here, drag this all the way back. This is exactly where the fair value gap should form. And look at that. We do in fact have a fair value, not only a fair value gap, but it's a BPR that is in line with our 2022 model, that is perfectly placed in that fair value gap partition. So once again, there's that fair value gap partition. And so I already have this drawn out, so I'm not going to draw this out again. But this was a 1 minute 2022 model running on the 81 power of 3, where we sweep liquidity, we break this high, retest the fair value gap within the fair value gap partition, which was a 2022 model, and then we expand to this high. So 2022 model running within a dealing range. Very, very cool. And with that, guys, hopefully that made sense. If you guys have any questions about it, let me know. I'm still learning about this too, but I just think it's so fascinating that these 2022 models really are working inside dealing ranges. Sometimes. I don't know about all the time, but I'm pretty sure they do a decent amount of time. But it's just so cool to me how precise these markets are, and I thought I'd talk about it. So, yeah, definitely not my most perfect video today, but I just wanted to show you everything and at least get this video out because I didn't get it out yesterday, and I'm trying to be consistent in the future. Ideally, I'm going to make these videos every single day after they come out, and I do want to hopefully just make them simpler and better every single day when I do make them. And I know I'm not perfect with that sometimes, but I'm gonna keep getting better. With that, I hope you guys enjoyed this video, and I'll see you in the next one. Peace out.